Hi there, you're watching Market Cafe on ET now with me, Shreyanshi Singh and Priyanka Uppal, and over the next 1 hour we'll get you news and updates from within the country as well as across the globe. Also tell you which stocks you should be keeping on your radar bright and early this morning. But well, first things first, let's take a look at the handover coming in from the Wall Street, especially for this week.
Morning, Shreyanshi. Shreyanshi, for sure, this is the second consecutive week that the US market is facing for the weekly loss. Yesterday, the market was shut for a public holiday, but then a key data has to come in today. It is releasing today. That's December's non-farm payroll reading. And this could be a crucial point to which could be on the tap for a lot of radars. We've seen the kind of moves, all three major averages, they are on a track for a weekly loss. You talk about S&P 500, that was off less than 0.5%, 0.4%. Nasdaq was down by 0.7%, and even Dow is on pace for 0.2% of decline. So it has been a weak. Not just this week, last week also. It's a consecutive second weekly week losses that we've seen on the US indices. But the cues that are on the tap is, of course, the non-farm payroll data. That's what. But what happened in crude? Crude has jumped 1% yesterday.
Well, absolutely, and that came after a session where largely in the beginning of the session we had crude prices largely unchanged, not much that was happening on that front, at least when it comes to crude. But when you take a look at the move at the close, oil prices rose more than 1% as cold weather gripped parts of the US and Europe as well, boosting winter fuel demands. When you take a look at price moves, you're looking at Brent crude futures that were up 78 cents or about 1%. Around those $76 a barrel levels is where Brent was at, and even when you take a look at US WTI, you're taking a look at gains of 0.9% thereabout coming in. $73 a barrel is where that one was also at, and this was after both benchmarks had fallen more than 1% on Wednesday as well. So that's largely the kind of moves that you've seen coming as far as crude is concerned. When you take a look at refiners along the US Gulf Coast, they raised their crude oil net inputs as well to the highest level since December 2018, and that is according to EIA data as well. And Shell, on the other hand, also warned of a weak fourth quarter on Wednesday. So that is also something that you're looking at by the way of factors that the market is looking out for. But the market structure largely in Brent futures is also indicating at this point that traders are still becoming more concerned about supply tightening. At the same time, you do have demand that is increasing. So those are what the supply and demand fundamentals then look like, at least as far as crude is concerned, Priyanka.
Okay, so crude inched higher, bond yield is also inching higher. It was nearing 4.7%. But then let's understand what are the events that need to be watched out for today. Of course, the kind of moves we've seen on Indian markets, and now with the earnings season started to kick off, TCS reported its number yesterday. Today we don't have major earnings, but we have earnings from broader market like CESC and PCBL. But then IIP number is on the tap today, and especially this data is key once we have seen the advance estimate for GDP and the kind of sluggish growth we've seen. So we need to watch out how is manufacturing shaping up for India. Forex reserves, then we've just spoken about unemployment data and the non-farm payroll data, which is on the tap for US. Shriram Finance will trade ex-split today. There are some key earnings from broader market today, and US Supreme Court to hear a case on the ban of TikTok. That's on all the people who are from the entertainment world tracking all these things.
Well, absolutely. And then moving on, then let's kickstart our coverage this morning with the top global headlines. Global economic growth is expected to remain at 2.8% in 2025, unchanged from 2024. As per the latest United Nations forecast, now what's holding back growth from rising? The top economies of the world, US and China. The report, in fact, also highlights that the forthcoming subdued growth reflects the ongoing structural challenges, the likes of weak investment, slow productivity growth, and even lofty debt as well as demographic pressures as well. Now, the report also said that the US growth was expected to moderate from 2.8% last year to 1.9% in 2025 as the labor market also softens. And meanwhile, you do have consumer spending that is also slowing.
All right, meanwhile, there's a mild cut to China estimates as well, from 4.9% in 2024 to 4.8% this year, with public sector investments and even the strong export performance partly offset by subdued consumption and lingering property sector weakness. On the flip side, Europe is expected to see a modest recovery with growth going from 0.9% in 2024 to 1.3% going ahead in 2025. Now, this is aided by easing inflation, resilient labor market, South Asia is also expected to remain the world's fastest growing region, with regional GDP projected to expand by 5.7% in 2025 and 6% in 2026. This one is supported by strength from India as well as recoveries in Bhutan, Nepal, Pakistan, all the neighboring country, and finally, of course, India. India solely is expected to grow by 6.6% in 2025, 6.8% in 2026. This is driven by consumption and, of course, the investments.
Rather than that is what is being penciled in when it comes to global economic growth. But shifting focus to the Federal Reserve, then policymakers continue to sound cautious. Even now, Boston President Susan Collins said that significant uncertainty over the outlook calls for moving forward cautiously with future rate cuts. Meanwhile, you did also have the Richmond President Thomas Birkin, who also hailed US macro strength, forecasting more growth to come in 2025 as well. However, as the recent rise in the long-term interest rates reflects higher risk premiums as opposed to concerns about inflation. Even when you take a look at the commentary coming in from the Philadelphia President Patrick Harker, who also expects the Fed to cut rates, but also added that any sort of imminent move down is not needed amid considerable uncertainty at this point over the economic outlook. And finally, you did have Governor Michelle Bowman also joining the bandwagon, flagging inflation risks and also encouraging further caution when it comes to rate cuts as well.
But in the meantime, fierce wildfires that is burning out of control in the greater Los Angeles area have killed at least 6 people and forced nearly 180,000 more from their homes. Authorities said the total number of deaths is unknown. The Palisades fire has burned through more than 17,234 acres, almost 27 square miles. It has destroyed 1,000 structures and is entirely uncontained, making it the most destructive in LA history so far. Let's go across to Times Network's Ashish Parekh to understand the destruction and what is set to follow in the days to come.
Let's start with the Palisades fire. This has engulfed the entire area above Santa Monica. This is, of course, an upscale neighborhood. Shortly, I'll be showing you all the details. This is Santa Monica. We, of course, spot a lot of Hollywood celebrities and a lot of paparazzi here as well. This is the extent of fire. 17,234 acres absolutely destroyed. What's ironic is that this is happening right near this massive body of water, and yet the authorities in California absolutely have no water to contain this. Now, I'll be giving you details about this and a whole lot of other fires as well. But before that, let's take an overview about what's happening. This is Los Angeles. This is the main city. This is, of course, the Palisades fire. Just on the eastern side, you see the Eaton fire. This is not very far away, but still it is something that has damaged around 800 acres. To the north of this is the Hearst fire. So these are the 3 main fires that we witnessed. This is what happened on 7th of January. Getting into the details of these, right between the Eaton fire and the Palisades fire, we see the Sunset fire. Now, this is important because this is where a lot of iconic places exist. This is where somewhere around here, this is where you saw the iconic Hollywood Hill as well being destroyed. This is the Hollywood Walk of Fame, which is not very far away, and these are all the upscale neighborhoods of Los Angeles. So you can imagine the amount of damage that can happen if this fire is not contained. And even as we speak right now, this fire is spreading this way. It is moving towards the city, and all these areas are under threat. This is the extent of fire that we are seeing. It might not be showing on the map right now, but this is Studio City, and shortly we'll be playing out the visuals of that as well. Coming back to the main fire here, the Palisades fire, you can look at how this is the Pacific Coast Highway. Right from Santa Monica, it goes right adjacent to the Pacific Ocean and it moves towards Malibu. Now, if you look closely, this is the Pacific Coast Highway. Now, ideally, what would happen is that people who realize that there is some sort of a fire in this area will actually try to escape from the Pacific Palisades. This is the area, this is the place where a lot of people stay. There is a school, there is a college, there are big hotels as well here. And we have one visual that I'll ask my team to play out now at a school near the Pacific Palisades. Now, Palisade High, in fact, is the name of the school, and that's exactly where this occurred. We'll be playing out those visuals correspondingly to ensure that you get an idea about what's happening. Right. So this is the road that you see on your screens right now. I believe it is being played out. Yes. This is the road that you see on your screens. This is where it happened. So all the people living here, the first thought in their mind would have been to escape towards the Pacific Coast Highway and then start moving towards Malibu. Now the problem here is that they did not realize what was happening on the way to Malibu, which is the fact that this Palisades fire that you see continued to rage on even further ahead. So what eventually happened is that a lot of this Pacific Coast Highway, you see the red line here. This is part of the Pacific Coast Highway that has also been engulfed in fire. We have the visuals for that as well. We'll switch to those visuals now. The Pacific Coast Highway, a lot of people who were trying to escape towards Malibu also got caught here, and the visuals are absolutely stunning.
Alright, then that was a lowdown coming in on the magnitude of the fire and the damage that it then threatens to cause. Already claimed 5 lives, so that's some sombering news coming for you early this morning. But time for a very quick breather on the show. Then when we come back, we'll take a look at how the Asian markets are faring. Welcome back. Thank you so much for staying tuned in. Well, as promised, it's time to get you a quick check going on the Asian markets and what they're doing. And not a good day as far as Asia is concerned at this point, because you do have almost all of the indices declining at this point. You do have investors also assessing November pay and household spending out from Japan. So when you take a look at real household spending in Japan, fell 0.4% on a year-on-year basis in November, a softer fall though compared to the 0.6% decline that was being penciled in. When you take a look at Japan's Nikkei, that is down 0.7% in trade, 0.6% right now. As well, when you take a look at South Korea's Kospi as well, that's the one holding on to that 0.6% decline coming in. Even ASX 200 is also in the red as we speak, because that is also down 0.7% as well. On the flip side, you do have Hang Seng that is holding on to a shade of green, was in fact, and currently it's also slipped into the red, down and marginally so, but still holding on to a tinge of red is where Hang Seng is also at. So all of the Asian indices at this point are holding on to a tinge of red, and a decline is what you're seeing through and through. When you take a look at where we shut shop, 23,526 is the kind of level that we were looking at, and not a great handover coming in from Asia. A subdued start is what we're really penciling in, Priyanka.
Okay, so subdued start, yeah, it's a sea of red, what seems, the kind of cues coming in from Asian market. Let's see how we fare out, though we're already trading below 200 DMA, and the last, when we were below 200 DMA for more than 3-4 days, we did revisit the lower levels like 23,300. Let's see if we go till there also or not on India indices. Welcome back. You're tuned into Market Cafe, and let's get you the TCS earnings, which were reported yesterday after the market hours. Now, the earnings, this was largely a muted set of quarter for TCS. The IT reported a slight miss on the top as well as on the bottom line. However, margins did come robust near the 24% mark, and order booking remains healthy. Management highlights early signs of revival in discretionary spending also, especially in BFSI space. Growth in the India business jumps over 70% if we talk about BFSI alone. Let's get Anisha to break down the numbers for us.
70% growth does look impressive for the India business, but one needs to put it in perspective that India still forms a small part of the overall pie. Remember, this is on account of the BSNL deal that they have been ramping up over the last few quarters, and that's why last quarter there was a 95% year-on-year growth when it comes to the India business of TCS. That's, of course, moderated this quarter to 70%, but it comes as a double-edged sword because BSNL deal was not that margin accretive. It was a deal that they had done for nation building, so, of course, the margins were on the lower side. So even if the revenue ramp-up is higher, the company loses out on margins, and this time, that's why when the BSNL deal moderated a bit, the margins actually expanded. So it comes in as a double-edged sword. Of course, the ramp-up is going to continue for the next few quarters as well on the BSNL deal. But do remember, India is a small part of the overall business. Over 50% revenue comes from North America, and that's the pressure point.
All right, then that's the pressure point. Thanks, Anisha, for getting us a lowdown on those numbers as well. But let's also listen in to what the management then had to say on their growth in the third quarter and, in fact, on their outlook for this year going forward then.
I said BFSI TCV, then obviously consumer business is also where the TCV went up. And Europe as a segment, we find TCV has gone up. So there have been, in fact, almost all verticals. The TCV has shown a very healthy growth. So it is not necessarily only BFSI. Medium to long term, growth should return in multiple verticals.
I think I said earlier, the answer is no. I think we would continue to hire, and as Kriti said, we expect only a positive swing because of the fact that the nature of jobs will change and not the number of jobs. We don't expect the number of jobs to reduce. So we basically expect the same number of people to come or more, and train them accordingly so that they can fit and do the newer kind of jobs. Organization-wide training on AI, Gen AI, not just at the lowest level, but building a pyramid now to basically create a AI-first organization.
Okay, we did try gathering more views, more expert views from the people who track the space closely. We did speak to Omkar Tangsale, who's a senior research analyst for Vasuki India Fund. What kind of growth estimates he is penciling in? Let's get you.
The large client account from the pharma deal might, going to impact. So everybody was expecting the same to be happen for this quarter. But I believe it's more of a temporary phase, and I believe the revival in the North American side is going to happen, and we can see from Q4 FY25 onwards. And we can expect largely on a similar side of a growth that we can expect on TCS as well as Infosys. But Infosys has a major edge. We are estimating around 8 to 9% dollar revenue growth for the FY26, whereas in Infy will likely to grow around 9 to 10% for FY26. So Infy has a higher edge, and the revival in the discretionary spend might be into the favor of the Infosys as well, and Infy might do better in FY26.
All right, and that's the word coming in from Omkar Tansale as well. But moving on, then restaurants across India are up in arms against Zomato and Swiggy. Essentially, they're standalone apps for 10-minute food delivery. Now, the National Restaurant Association of India, or NRAI, representing the interests of several restaurants, in fact, is likely to approach the Competition Commission of India to address concerns over antitrust activities. Now, this is regarding Zomato and Swiggy's recent launch of Blinkit Bistro as well as Snack, respectively. So what is the rationale behind it? How will it then impact restaurants nationwide? To get more perspective on this, we in fact caught up with the national president of NRAI, Sagar Daryani, who also explains the real issue amid this fight. Let's go across and listen into what he then had to say.
We have nothing against quick commerce, right? I think quick commerce just adds a zing to food delivery. It's okay as long as restaurants are doing it. What we are absolutely not okay, and I repeat, what we are absolutely not okay is with these aggregators doing private labels and getting into the food space. So in a way, they're getting into our trade. Now, on the several communications that we've had with them over the past, they've always given us verbal assurance that they will never get into our trade. They will never get into our territory, right? Their job is aggregation. Their job is logistics. Now, the problem here is that why we worry is that, they have all our data. They have the app. Now, nothing stops them from migrating our customers to the similar product that they're selling in their own app. Secondly, for us, there's complete and total consumer masking. We don't even get the consumer data, right? So somewhere I feel that this is, in a way, absolutely unfair. We are completely cornered, and we feel it's time for us to speak our voice out and to raise concerns, because we've been at it. We've been at the CCI against the aggregators for the last 3 years. Rather, CCI has also mentioned, as per news reports, that they found some anti-competitive measures done by aggregators. So in a way, we stand vindicated. Now, on top of that, for them to come out here and launch their own Q-commerce app, selling food by private labels, where they can migrate a guy selling they can sell a brand selling tea or momos or samosa, then they can completely migrate them to the own tea, momo, samosa that they are selling or biryani that they are selling. I think it's absolutely unfair and very badly dampens the small restaurant operator, the localized restaurant operator who's actually making a survival by snacking in a very, very big way.
Okay, so earlier it was about e-commerce. Now even the NRAI, Restaurant Association, is feeling that the way the entire competition is intensifying, and they're feeling the heat now. Let's see how it fares out. Moving on, it's an ET Now exclusive. Government is working on an economic booster plan to aid the revival of Jammu and Kashmir's economy. Plans are along the tourism and hospitality sector, wherein industry stakeholders are meeting government officials. Sameer Dikshit filed the support earlier. Let's get you that report.
The central government, along with the Jammu and Kashmir state government, has drawn an economic booster plan for the state. And this booster plan is completely aligned with the new Jammu-Srinagar rail link, which is all set to get open for the commercial operationalization very soon. Now, what we are picking up from our sources that the central government officials, along with the state government officials, held a very important meeting with the representatives from the health sector, from the tourism sector, from the hospitality sector. The representatives of ITC, Taj Hotels, MMT, Make My Trip, and several other such entity, their representative were present in this meeting. And not just these players, but even the big Jammu traders, they were also part of this important meeting. And the entire meeting was that how the Jammu and Srinagar area can be further developed with more and more investment. What government understands that the opening up of new Jammu-Srinagar rail link will draw thousands of crore of investment in the entire region, and this will also help to generate thousands of new employment opportunities in the region. Now, why this entire project or the economic booster is aligned with the Jammu-Srinagar rail link project? Because if you see, as of now, the rail connectivity from rest of the country was till Jammu, but now with the USBRL rail project, the Udhampur-Srinagar-Baramulla rail link project getting completed, and the rail connectivity further getting up to Srinagar. So this will help to that more and more tourists will flock in the region, and the larger number of tourists means that this will get in more opportunities for the players in the hospitality sector, health sector, and even tour and travel operators as well.
Alright, then thanks Sameer for getting us all of those important updates then. But moving on, then L&T has gone ahead and issued a clarification on the company's chairman S.N. Subramanian, facing heavy criticism for his comments advocating for a 90-hour work week. They also said that the chairman's remarks reflect his larger ambition, as well as stated that extraordinary outcomes require extraordinary effort. Remember, this comes after L&T chairman expressed regret on not being able to make employees work on Sundays as well. So that's the latest coming in as far as that matter is concerned. A clarification has been issued by the company.
But this has certainly sparked a controversy on social media. We stay for a short break here. When we come back, we get you all the action from the derivative space, the buzzing stocks for the day. Don't go anywhere. Welcome back. You're watching Market Cafe. Now let's get you the derivative action. Ansh is standing by. Ansh, Bank Nifty has already hit a 6 months low. What was the action majorly? We've seen a clear trend of short built up on both the indices. What were the major activities in the F&O snapshot?
That's right, we are seeing short build-up in both the indices, but let's start with Nifty first. Nifty has been declining for second consecutive session, but if you can see in the chart, it has been taking good support around that 23,500, not just for second consecutive session, but if you see the trend from December onwards, we are seeing that it has formed a good support base around that 23,500 mark. So unless until we don't give a decisive breakdown from this, we can have some hopes in the market on upside. But if you talk about index future, then like you mentioned, yes, we are seeing open interest has gone up by around 5%, indicating short build-up, which is a bearish sign. Whereas on option front, we are seeing most active call writing happening at that 23,800 strike, indicating some resistance around this level. So on upside, this is the level where we may face strong selling pressure, and on downside, 23,500 around level seems to be acting as a good support. If we talk about Nifty Bank, then yes, Nifty Bank has touched a 6-month low level, indicating some bearishness. Also in index future, we are seeing that open interest has gone up by around 3%, indicating short build-up, which is also a bearish sign. Now, if we talk about FIIs, then FIIs in index future have covered their long position by around 10,000 contracts. They have added around 19,500 contracts. So net to net, we are seeing addition of around 30,000 contracts on downside, due to which the total long position has slipped a bit down from 19.2% to 16.2%, and this is the 10th session where we are seeing FI long position below 20%. So they are not getting very positive in the market. If we talk about retail position, then they have added 35,000 long contract on upside, but at the same time they have added some short as well. But net to net basis, we are seeing good addition of 23,000 contract on upside, due to which the total long position has inched higher, crossing that 70 level to touch 70.2 level, and this is the highest we have seen in 7 months. Last time time we saw this on 4th June, and at that time Nifty had bottomed out and given a good rise. So maybe we can expect the same thing in coming sessions as well.
Ansh, let's really see how that really pans out for us. But time now to take a look at the stocks that you should be keeping on your radar bright and early this morning. In fact, Ria is standing by with just that list. Ria.
Yes, good morning. Let's take a look at the stocks that are going to be in focus today. First up, we have Ireda on the back of its quarter 3 numbers. They've posted a good set of numbers in this quarter. The net interest income has gone up by around 39% on a year-on-year basis, coming in at about 622 crores. The PPOP has also gone up by around 35%, and the net profit has increased by around 27% over the previous year, but the NPAs have increased sequentially. We've also got Lupin in focus today since they have received tentative approval from the US FDA for Ivacaftor oral granules. There's also Vodafone Idea since the board has approved a fundraise of rupees 1,910 crores at an issue price of rupees 11.3 per share. Also keep your eye out on Mazgon Dock since they have delivered the 6th Scorpion class submarine to the Indian Navy. IRB Infra will also be in focus today since IRB Infra and IRB Infrastructure Trust together have registered a 19% year-on-year growth in the toll collection for December of 2024. For December 24, the toll collection has come in at rupees 580 crores versus 488 crores in December of last year. We've also got Adani Wilmar in focus since the founder Adani Commodities is going to sell up to 175.4 million shares in an OFS which will take place from the 10th of January to the 13th of January at a floor price of rupees 275 per share. Also keep your eye out on Aditya Birla Capital since they are seeking an NCLT sanction for the amalgamation of Aditya Birla Finance into the company. And lastly, SRF will also be in focus since they have issued a clarification saying that the reported price hike by a US refrigerant gas distributor is in the context of the US market, and changes in prices of refrigerant gases for SRF will remain a function of demand and supply in the relevant market segment. So keep your eye out on all of these stocks today.
Thanks so much, Ria, for highlighting those stocks. But the kind of move we've seen in consumption space, especially the large cap FMCG names, there's this interesting report by Nomura also on the consumption space where they're talking about the traditional players headed with the likes of ITC, HUL, Marico. Where are they headed towards? Please highlight what all was talked about in this report.
Well, yes, so Nomura has come out with a note on the entire consumption space. Now, what they believe is that price hikes are going to return and volumes can remain range-bound. The valuations, although are reasonable at this point, for FY26, they have forecasted that staples volume sales and EBITDA growth will be around 5.5%, 10% and 12% respectively on a year-on-year basis. For paints as well, for FY26, they forecasted volume sales and EBITDA growth of 11% each on a year-on-year basis. They've also said that organized companies are going to recover share from regional or unorganized brands in inflationary times, and they also believe that competition from D2C brands is going to ease further, while quick commerce channels can act as a tailwind initially. Now for Marico, HUL and ITC, they've maintained a buy rating on all of these stocks. They have a target price of rupees 760 on Marico, of rupees 3,100 for HUL and rupees 575 for ITC.
Thanks, Ria, for that update coming in on what Nomura then had to say. But let's now take a look at the price revisions then in the CGDs. These will be kicking in from January 16th as well. In fact, Citi has also come out with a note on the upcoming price revisions, naming IGL, MGL, as well as GAIL as their top sectoral picks. Sharad is then standing by with a roundup of the key takeaways coming in from this note as well. Sharad?
A positive news flow coming in for city gas distribution companies, and of course the increased APM allocation announcements has come in, and this will be effective from 16th January. IGL in their exchange filing that stated that the domestic gas allocation has been revised upwards by almost 31%, increasing their share in the CNG segment from 37% to 51%. They also announced an additional RLNG volumes tie-up also with one of the major suppliers. Interestingly, MGL also came out with this update, and overall the allocation has increased by 26%, and the CNG segment allocation numbers have also jumped from 37 to 51%. Now Street was estimating that it would be a lower numbers, but it's a surprise, and it's a very strong surprise coming in for the city gas distribution players. Now how the prices are set, if you look at it, the regular APM gas price that is coming in at almost $6.50 per unit, while compared to the earlier estimated price by Citi, which was ranging at $9 per unit. Interestingly, Citi has come out with a flash note, and they've stated that this outcome is ahead of estimates, and the margin risk which were being seen in the short term and the medium term, that has been eliminated, and favorable economics of CNG remain intact. Now, if you look at it, the acknowledgement of this section of investors may find it hard to navigate the policy, which is a word of caution coming in from Citi, but still they have reiterated a positive catalyst when it comes to MGL, and the key sectoral picks still include MGL, IGL and GAIL.
All right, so partly this news was already priced in the price of CGD, but let's see how this one fares out. Thanks very much, Sharad, for highlighting the entire matter in detail. Now, let's get you the key stories from across the globe and, of course, the domestic market, starting from US first. In a major blow to US President-elect Donald Trump, the US Supreme Court has rejected his plea to delay his sentencing in hush money case. Meanwhile, the court's order clears the way for judge to impose a sentence on Trump today. However, the judge has said that he will not give Trump jail time, fine or probation. Moving on, Chinese President Xi Jinping will send a high-level envoy in his place to US President-elect Donald Trump's Jan 20th inauguration. Remember, Trump had invited Xi Jinping, but the top-level official would attend instead of him. The envoy would also hold talks with Trump's team. And now talking about India, India's global passport ranking has declined by 5 positions to 85th place in 2025 in the latest Henley Passport Index. While Singapore has maintained its top position for the second consecutive year, the index evaluates passport strength based on International Air Transport Authority data, which encompasses 199 passports and 227 travel destinations.
Alright, then on to some news back home then. When you take a look at the negative effects of social media, they're in the spotlight in the state of Gujarat. The state government, in fact, is mulling the introduction of guidelines restricting the use of mobile phones and social media for children, underscoring that too much screen time is not good for them. Moving on then, it is a foggy Friday for North India. Quite literally, Delhi has been covered in a dense layer of fog this morning with visibility dropping to zero. In some places as well, the IMD in fact has issued an orange alert forecasting very dense fog in Delhi and neighbouring states. In fact, the air quality worsened with Delhi's AQI standing at 409 in the severe category, prompting the re-implementation of GRAP Stage 3 anti-pollution measures as well.
All right, with this, it's a wrap on this edition of Market Cafe, but don't go anywhere as the market takes all the action forward.
If you like this video, then like, share and subscribe to ET Now.